Good morning. Welcome to the market opening bell on Monday, June 2nd. Last week, Hong Kong stocks fluctuated within a narrow range, lacking clear direction. The Hang Seng Index moved less than 500 points between a high of 23,603 and a low of 23,163, closing at 23,290 on Friday, down 311 points or 1.3% from the previous week, ending a six-week winning streak. The Hang Seng China Enterprises Index closed at 8,432, down 1.8% weekly, also snapping a six-week rise. The Hang Seng Tech Index closed at 5,170, down 1.5% for the week, marking its second consecutive weekly decline. For the full month, the Hang Seng Index rose 5.3%. The Hang Seng China Enterprises Index gained 4.4%, and the Tech Index increased 1.6%. Southbound trading via Stock Connect recorded a net inflow of 45.617 billion Hong Kong dollars, marking 23 consecutive months of net buying, though the inflow was over 70% lower than in April. Trade tariff-related news was mixed. A U.S. trade court initially ruled that President Trump's reciprocal tariffs were unauthorized, boosting market sentiment. However, a U.S. appeals court later upheld the tariffs, dashing hopes. Additionally, Trump accused China of breaching a mutual tariff reduction and critical minerals trade agreement, threatening tougher measures against Beijing, adding uncertainty to markets. Technical analysis: the HSI's narrow range and frequent fluctuations last week suggest this trend may persist. However, escalating US-China tensions could pressure the index to test the 23,000 level or the 50-day moving average at 22,756. Mainland markets were also volatile. The Shanghai Composite Index closed at 3,347 points on Friday, down 1 point weekly. The Shenzhen Component Index closed at 10,040 points, down 0.9%. For the month, the Shanghai Composite rose 2.1%, and the Shenzhen component gained 1.4%. On economic data, China's National Bureau of Statistics reported the May manufacturing PMI rose to 49.5 from up 0.5 points from April, meeting expectations. New export orders and import orders indexes rose to 47.5 and 47.1, up 2.8 and 3.7 points, respectively, driven by some U.S.-related firms accelerating trade orders amid temporary tariff reductions. May auto sales data showed strong growth for several car makers. Leapmotor delivered 45,067 vehicles, up 148% year-on-year and 9.8% month-on-month, leading new energy vehicle makers for three consecutive months. BYD sold 382,476 vehicles, or up 15.3% year-over-year. Pure electric passenger vehicles reached 204,369 units, up 39.6% year-on-year, while plug-in hybrids totaled 172,561 units, down 6.3% year-on-year. Xiaopeng delivered 33,525 vehicles, up 230% year-on-year, with over 30,000 units for 7 consecutive months. Li Auto delivered 40,856 vehicles, up 16.7% year-on-year. Xiaomi delivered over 28,000 vehicles and prepared for mass production of the Xiaomi YU7. Xiaomi added 29 stores last month, 298 stores nationwide, and plans to open 37 more in June. NIO delivered 23,231 vehicles, up 13.1% year-on-year. Geely sold 235,208 vehicles, up 46% year-on-year, with Zeekr at 18,908 units, up 2% year-on-year, and Link & Co at 27,630 units, up 27% year-on-year. Great Wall Motor sold 102,231 vehicles, up 11.8% year-on-year, with 34,535 units sold overseas and 32,638 new energy vehicles. US-China trade tensions weighed on US stocks, which ended mixed on Friday. The Dow Jones Industrial Average fell as much as 309 points to 41,906, but closed up 54 points or 0.1% at 42,270. The Nasdaq fell 62 points or 0.3% to 19,113. The S&P 500 closed flat at 5,911. For the week, the Dow gained 1.6%, S&P 500 rose 1.87%, and Nasdaq climbed 2%. For May, the Dow rose 3.9%, S&P 500 surged 6.2%, and Nasdaq jumped 9.6%, marking the best monthly performance since November 2023. The Nasdaq Golden Dragon China Index, tracking Chinese ADRs, fell 194 points or 2.7% to 7,032 points on Friday. Tech stocks' performance was mixed on Friday. Nvidia fell 2.9%, Tesla dropped 3.3%, Amazon dipped 0.3%, while Meta and Apple rose about 0.4%. On earnings, Gap projected up to 150 million US dollars in tariff related losses, but won't significantly raise prices, leading to a 20.2% share drop. American Eagle missed profit expectations with declining margins, falling 2%. Costco reported on ACE sales increase, beating profit and revenue forecast, with shares up 3.1%. On economic data, the University of Michigan's May Consumer Confidence Index was released up to 50, revised up to 52.2 from 50.8, flat with April, but still near 2022 lows. The US April PCE price index, the Fed's preferred inflation gauge, rose 2.1% year on year, below 2.2% expected, and 0.1% month on month as expected. Core PCE rose 0.1% month on month and 2.5% year on year, meeting expectations. Trump met with Fed Chair Powell, reiterating calls for rate cuts, but Powell emphasized decisions remain independent. This week, focus will be on tariff news, U.S. non-farm payrolls, and PMI data. May non-farm payrolls are expected to add 130,000 jobs, down from 177,000 in April, with the unemployment rate steady at 4.2%. Our stock pick today is United Laboratories, stock code 3933. United Laboratories drug products cover intermediates, active pharmaceutical ingredients (APIs), and finished dosage forms. Its finished dosage products primarily include diabetes treatments, anti-infective drugs, ophthalmic drugs, topical dermatological drugs, and neurological drugs. In addition to increasing investment in innovative drug R&D, the group is actively pursuing overseas licensing for new drug projects, aiming to provide global patients with more comprehensive treatment options. The group is also expanding its business layout to create a second growth curve. For instance, in response to population aging and rising healthcare consumption, it established a healthcare division last year. In the innovative drug sector, the group has 8 Class 1 new drug projects in clinical stages, including several high-value blockbuster products. In terms of industrial collaboration, in March last year, the group signed a partnership with New Zealand River Land Foods Limited, a pet food factory, to introduce high-quality prescription pet food from New Zealand to China, marking its entry into the premium pet food market. Additionally, the group is expanding into overseas markets, having obtained 6 overseas registration approvals for animal health formulations. It will continue to pursue overseas registration and market access for animal health products, accelerating coverage of global markets in Southeast Asia, Latin America, the Middle East, and Africa, aiming for balanced development between China and international markets. The group has also formed a comprehensive strategic partnership with China National Pharmaceutical Group, Sinopharm, strengthening cooperation across industrial chains, supply chains, and innovation chains to jointly build the future healthcare platform. In overseas formulation business, the group successfully won a bid for human insulin procurement by the Brazilian Ministry of Health at the end of last year. Moving forward, it will focus on diabetes products and prioritize expansion in Belt and Road countries, continuously increasing the contribution of overseas formulation business. The healthcare division established last year has developed 6 product lines: general nutrition, health supplement, cross-border nutritional supplements, medical devices, medical aesthetics, skincare, and disinfectant skincare. It has launched 18 products covering bone and joint nutrition, gut health, cardiovascular health, vision protection, and immunity enhancement. The division has built an online platform matrix including e-commerce, live streaming, and new retail channels like Tmall, JD.com, Douyin, and WeChat more, while deepening coverage of pharmacy chains and health-focused vertical channels. In R&D, the group has established a comprehensive system, including platforms for biologics, chemical drugs, innovative drugs, animal health, clinical research, and external collaborations. It is developing 45 new human drug products, 22 of which are Class 1 new drugs, focusing on endocrinology, metabolism, autoimmune diseases, ophthalmology, and anti-infectives. For animal health, 59 new products are in development, covering pets, livestock, poultry, and aquaculture. Additionally, projects related to generic drug quality and efficacy, consistency evaluation, medical ethics, and pharmaceutical excipients are progressing steadily. Recommendations buy at 14.2 Hong Kong dollars, target at $16, stop loss at $13.4. I do not hold the above stock.